Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about HANG LUNG PPT interim report. HANG LUNG Properties Limited offers a diverse range of businesses and services, including property investment development management of properties such as plus shopping malls, plus office premises, plus residential premises, plus retail spaces, plus serviced apartments, plus hotels, plus car parking facilities, plus industrial premises, apartment operating and management, project management, car park management, property agency services management, and financial services. HANG LUNG Properties Limited has seen a significant stock price increase of 69.64% over the past year, driven by a combination of factors. The Hong Kong real estate market recovery, following the withdrawal of cooling measures in February 2024, has been a major contributor to this growth. A favorable interest rate environment, with declining US dollar benchmark rates and HIBOR, has made mortgages more appealing and reduced HANG LUNG Properties' interest expenses. Increased transaction volumes and stabilizing property prices have also contributed to the company's success. Hong Kong's population growth, driven by talent introduction programs, has increased purchasing power and aided in market stabilization. HANG LUNG Properties' HLV3 strategy, which focuses on core city expansion and ROI growth, has been well received. The strong performance of the Westlake 66 project in Hangzhou, with high retail leasing rates and a 20-year lease agreement for the South and North Towers, has also boosted investor confidence. Positive analyst sentiment from CD, highlighting the company's robust retail portfolio in China, has further contributed to the stock price increase. Overall, these factors have combined to drive HANG LUNG Properties' significant stock price growth over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the company's focus on physical stores rather than e-commerce, consecutive years of mainland Chinese rental revenue growth, upgrading retail and street environments in Kunming, and increasing property leasing revenue. Additionally, the residential and serviced apartment segment has seen increased occupancy and revenue due to government policies. On the other hand, revenue decline is primarily driven by a property market slump, high costs of acquiring new customers online, softened consumer sentiment affecting sales rent, and oversupply in the office portfolio, leading to reduced demand for office spaces. The company's malls have maintained steady performance with high occupancy rates above 90%, but this has not been enough to offset the decline in revenue from other segments. Net income and profit margins. A changing trend. The net income of a company underwent significant fluctuations between 2019, 2020, and 2025. In 2020, it increased by 18% compared to the previous year. However, this growth was short-lived as the net income decreased by -6.7% HK dollar, or -5.3% RMB, from 2024 to 2025. Profit margins also experienced a notable change during this period. In 2020, they increased by 13.6% compared to 2019. A further increase of plus 15.7% was observed from 2024 to 2025. The contrasting trends in net income and profit margins suggest that the company's revenue growth may have been offset by rising costs or other factors contributing to the decline in net income. The sharp decrease in net income from 2024 to 2025, amounting to a 93% drop, inferred, indicates a significant deterioration in the company's financial performance during this period. This drastic change warrants further investigation into the underlying causes and potential implications for future growth. The company's financial performance indicates a consistent generation of positive operating cash flow. In both 2025 and 2024, the net cash generated from operating activities was substantial, with $1,340 million in 2025 and $1,062 million in 2024. This trend suggests that the company is efficiently managing its operations to produce a significant amount of cash, which can be used for various business purposes such as investments or debt repayment. The company's financial summary reveals mixed signals regarding its debt levels and interest expenses. While total debt has decreased from $57,376 million to $54,767 million, total non-current liabilities have increased by 1.6%. However, the most significant change is in interest expenses, which have generally decreased across various summaries. Interest expenses have been reduced due to fewer projects eligible for interest capitalization and a decrease in gross finance costs of 7%. Overall, it appears that interest expenses have decreased significantly, but the company's debt levels remain somewhat ambiguous. The company's financial summary reveals a mixed performance across its segments and regions. Notably, mainland China and Hong Kong experienced declines in rental revenue, with mainland China seeing a 1% drop in RMB terms and 2% in HKD terms, while Hong Kong saw an overall decrease of 3%. The performance of the United States and other unspecified regions remains unclear. Management strategy shifts focus to asset efficiency. HANG LUNG Properties has outlined its new strategy, HANG LUNG V3, which prioritizes strengthening positions in existing cities through management contracts, construction, and asset enhancements. The company is transitioning from an asset-heavy approach to a more efficient one, focusing on accretive retail management contracts and strategic capital investments. This shift is evident in the successful implementation of asset-light expansion projects, such as the latest project in Hangzhou, which will enhance competitiveness by expanding leasable floor area and improving customer connectivity. The company expects these investments to support long-term development and drive growth through a series of nationwide events and marketing campaigns aimed at boosting sales and brand loyalty. Overall, management strategy emphasizes a more agile and efficient approach to business operations, positioning the company for sustained success in the market. The company has a history of paying dividends to its shareholders. In recent years, the interim dividend per share has remained consistent at $0.12 for both 2025 and 2024. The total amount paid out in dividends also reflects this consistency, with $913 million paid in 2025 and $699 million paid in 2024. That concludes the financial summary for HANG LUNG PPT. Feel free to comment below, and I will be happy to answer them when possible.